All right, everybody, welcome back to the Telivy MSP podcast. We have a very special guest for you all here today. Kevin, would you like to introduce yourself?
Yeah. Hi, my name's Kevin Ishizu. I'm the head of insurance for Telivy, and 30 plus years experience in the insurance industry. Kind of most recently consulting and working for insurtech companies, particularly in the cyber insurance space.
Awesome, very, very cool. And just a little bit about me. I'm the new head of partnerships at Televy. Very, very excited to be on this podcast with you, Kevin. So let's actually get right into it. 30 years experience in the insurtech industry. Um, I understand you have experience across Nasdaq, Wells Fargo, executive risk analysis, and eventually Televy. Could you maybe walk us through your career for us?
Yeah, sure. So I was thinking about it and the applicability to insurance and cyber and cybersecurity and what we're doing today. And yeah, that part really started in 1994 when I moved over from kind of the investment banking, retail securities business over to insurance. And our clients being here in San Francisco were really kind of the who's who of technology back then. So it was, semiconductor companies, it was, companies that were starting to do things like, IT, software as a service, those types of things back in the mid to late 90s. And, at that time it was just really fun. I definitely rode that wave of, kind of the IPO boom in the 1999, 98 through 2000 bust, and seeing a lot of tech companies evolve, but also seeing how insurance really needed to be modified and transformed for kind of this new technology. So when I started, cell phones, I mean, they existed, but not in a commercial way. The internet existed, but not in a commercialized way, right? That was like when AOL started and a lot of those types of companies.
Yeah,
Um,
yeah.
so just really interesting to see that evolution kind of over time, and to see, kind of traditional insurance products, kind of fail, kind of the new tech industry. If we think about things like what's covered under kind of a business owner's policy or general liability, things like property data is data property, and most case laws establish that it's not, right? So damage to data or code was really not covered. Business interruption struggled to cover new tech perils. Things that we would kind of take for granted, like advertising injury, media, copyright infringement, trademark infringement, those all struggled, right, to cover these new technologies, cyber and internet crimes. So a lot of changes, right, had to be made. A lot of policies that were traditionally used for those types of perils had to be endorsed massively, right, to satisfy that. So very interesting to see that happen. I think our firm, I was part of the leadership team of a company that I started with called Carpenter Moore, which was actually acquired. You referenced Nasdaq, but we were acquired in 2005
Hmm.
by the Nasdaq, technically the stock market, but they had an insurance division. And so, kind of prior to that, during Carpenter Moore, we really started to focus and, a whole team based around, technology, errors and omissions, and cyber liability. And we did that kind of in the late 90s, really focusing our book of business around, key employees that were able to really gain expertise, and more importantly, build relationships in the industry. So, that was really, really important for us, growing as a firm, to have carriers reach out to us and say, we need your input. Like, what policies would you support as we start, trying to create new products for technology companies? So we're
Interesting.
really kind of in that forefront of innovation at that
I,
time.
I I got a couple questions actually about what you said. I think we do take it for granted because just now I was thinking, wait, data? wasn't protected or wasn't considered as property, and that led me to think, wait, what about intellectual property? It's mind-boggling. Cybersecurity, insurance, and the law was so. Could you, yeah, help me understand? So it like, does that include intellectual property? Like, if somebody had software or or things stored on their computers.
Absolutely. And so it's complicated. It's very, very complicated. We think of like intellectual property, right, as things like copyright, trademark, trade dress. Um, and a lot of those perils can be covered. Where we start to run into a lot of problems are going to be like trade secret
Yep,
and
yep.
patents. And a lot of the industry, we've had products out there trying to cover, everything from the liability of losing a patent, having intellectual property like stolen, from your place of business, through digital means. And so those we've been struggling with that because there's such a what we call moral hazard that exists within our business. Like, um, are you incentivizing somebody to steal if you can insure for certain things? Are you incentivized to steal yourself, knowing somebody else is insured for things? So you have a lot of different moral hazards, and then the liability of stealing the next gen cell phone or um, you know lithium ion battery or solid state auto batteries, right? The consequential damages of stealing something like that are just so massive. It's hard to find enough insurance. So a couple of different
I'm
things.
actually curious then, well, how, since you worked through this entire shift in perspective, right? How the industry sees data and securing data in digital data, right? Cybersecurity. What do you think were the factors that led to to the change? Why did it change, right? Why are things different now than they were in 1999, 2000s?
Yeah, no, great question. I think a lot of it has to do with a lot of your traditional carriers, kind of like a Chubb or a Travelers or a Hartford or a Zurich, tend to be more risk adverse, right?
Mm,
So they're in the industry of risk, but they're in the industry of risk where they've got, you know, 10, 20, 50-year schematics, right, on, fire risk or hurricane risk, right, global
mm.
pandemics, things like that,
Yeah,
where
yeah.
they model and understand. And we don't need to get into, how many 1 in 100 year events we've had in the last five. Um, but you kind of understand where I'm going with that, where
Mm,
technology um, and use of the internet and e-commerce, those are all things that really kind of scared them. The potential aggregation of risk, right? If customers that are on using a certain web interface or something like Microsoft Windows, for example, were to go down, the business interruption would be staggering. So
mm,
early on they really hesitated to offer insurance. So it really was carriers like Lloyd's of London. I'd throw like AIG in there that were thinking more creatively and out of the box. And a lot of kind of mid-tier carriers that wanted to learn more about it to see if they could gain market share. And so things like, if we think about kind of general liability, property insurance, those do really well for tangible property and tangible assets, right? But they don't really, right, do well for things like data. And that's where
mm.
we had a lot of case law, right, different states, and had to kind of codify, right, and different laws and safety protocols, and then see insurance evolve, where Chubb, to retain some of their top, right, enterprise level customers, had to really create these products and start to address it because it's affecting everybody now. There's no industry that's not tied to, right, the internet, data,
Yep.
matters, right? It's in everybody's business and operations today. So there has to be some sort of adaptation there.
Interesting, interesting. And you mentioned one of the risks was, system shutting down, right? Getting coverage for that. And so I'm curious, how have the risks changed over time?
Mhm.
Because, I'm curious, like, oh, like when did the hackers started becoming a player in this equation, right? When companies started going, oh, we need to secure ourselves and we need insurance policy to cover, right, exploitations and vulnerabilities, and started like the industry started understanding, oh, this is a part of like, daily life now.
Yeah, no, it's something that's, kind of been around ever since the internet really
Mm,
went live and that connectivity was there. I would say, some of the very early cases of, kind of businesses shutting down were kind of just self-inflicted, right? It
mm,
was almost too much growth, right? So you saw kind of in 1998, 99, you saw companies like, Charles Schwab and E-Trade. I think and the numbers still sound large today, but they were hitting, kind of 55 million hits per day, billions of hits per month. And just
wow.
that volume, right? They almost created their own, right, denial of service, right, events where their capacity, their infrastructure couldn't handle it. And so, people that had accounts and wanted to buy or sell, there were claims out there, right, against those brokerages saying that, we've lost millions of dollars as,
Mm,
collectively as class action. So we saw those suits as kind of early as kind of that late 90s, mid 90s, late 90s. And I think, some of those started to, some of those types of claims started to creep in where, folks could say, oh, we can do a, denial of service attack, right, on some of these companies and just shut them down. So I think we started to see those kind of in that time frame. And then
wow.
things like business interruption, right? Business interruption coverage is almost always on kind of a stated perils basis, right? So things that shut down your business, prevent you from manufacturing, or prevent you from operating fully, right, are typically, kind of those physical perils, right? And here is this a physical, right, peril that can shut somebody down, and those all had to be disputed. So, that's when we started thinking about like how can we create kind of a business interruption policy. Those
Mm.
ideas started coming up in kind of that late 90s timeframe.
It's interesting that the first denial of service was self-inflicted.
Yeah.
It makes a lot of sense though. Yeah. Yeah. Rapid growth and hitting these problems for the first time.
Mhm.
So I'm curious, as you move through your career, um, how did you meet Naren and Vijay from, that's we actually just had them on the podcast last time talking about yeah, the journey. Yeah, how did you all meet?
Yeah, so I guess we're going back maybe 2.5, 3 years ago, and I was consulting. Well, I guess it started with a relationship I had with an underwriter, Ben Grosser. When let's see, I'm trying to think. He was at RLI, was the name of the insurance carrier, and I might have been at Wells Fargo, I think at the time, Wells Fargo brokerage. And so he was one of my underwriters, and built a good relationship. And he kind of spun out and started working in some of the insurtech companies. So there's one called At Bay, and he reached out to me saying, "Hey, I'm with this new kind of cyber insurance managing general agent, and we're bringing in kind of cybersecurity scanning solutions and marrying that with insurance." And he was like, "Can I ask you some questions?" And I was like, "Of course." And at the end of the conversation, I was like, "Man, you need kind of a consultant that's been on the brokerage side." And kind of can help you guys with go-to-market strategies and messaging, because this is pretty complex. And so I became a consultant for AtBay. And a few years later, Ben was off working with Narain and VJ, and reached out to me, and asked if I had interest in coming on board. So there were those three founders, and then myself coming in as kind of a founding member.
Interesting. Wow, that's super, super cool. And I'm curious as well, right? I would imagine that insurance companies, agencies need to understand what risk is involved, right? Like just like, home insurance, right? Like what is the risk of flood? What is the risk of wildfire? For cyber insurance, I would imagine companies need to know risk of cyber attacks or vulnerabilities or things like that. And I'm starting to connect the dots between, cyber insurance companies and running risk assessments, which is what Telivy does today. Could you shed some light on that in terms of how those work together in the industry?
I can. I think it's something that's been maybe embarrassingly naive on the part of insurance carriers from kind
Mm,
of the infancy, right, of these products. They would use applications, and the applications really weren't digging very far, right? It was
mm.
what is your industry, um, what is your revenue? Those were the big, right, tires. Like you're now at like 70% of their underwriting just with kind of industry and revenue size. Um, and they really didn't know how to look at cyber infrastructure, especially in the middle to small market. In the enterprise level, it would be fairly common that teams of underwriters would come in and actually sit down and have access to a CISO, to a risk manager, to a CFO, and be able to ask questions, right, about infrastructure, about their internal policies and controls. And so I think early on, a lot of underwriting was, kind of based off of a, policies and procedures and controls standpoint. So if we think that a company is running really solid internal controls, right? Has these policies and procedures, risk has been identified, policies have been in place, policies are enforced, and results are presented to the executives and the board members, kind of a COSO style, right, of leadership, then we should assume, right, that this company will make changes, protect their business, protect their customers with cutting edge cybersecurity solutions. And that worked fine for more the enterprise level, but I think for the mid market and the smaller companies, um, we really saw, like the industry really saw that as an untapped potential to generate more gross written premium. The numbers were really favorable because professional hackers, right, really didn't see the value in going after, kind of a corner mom and pop shop. Um, and they do now, right, because of
Yeah, yeah.
ransomware and the ability for kind of a kitty hacker to go in the dark web, find some way to hack somebody's email, which is a very simple solution, especially using phishing techniques. And so what we saw a few years back was this massive increase, right, in ransomware claims and financial, transfer fraud, funds transfer fraud. And so, I think the industry has been there's been times where they've been caught failing to underwrite certain risks appropriately. And I think the small to mid-size really costs the insurance industry, dearly, without asking some very simple questions. Do you have funds transfer protocols in place? Right. So if somebody's asking you to wire money and it's a material amount of money, are you calling, making another phone call to verify the authenticity of that request? And so I think those are all things that the industry has learned just within the last couple of years, right? So
Mm.
we're talking about these products going live, kind of in the early 2000s where they were commercially viable. And 20 years later, right, these mistakes were made. So I
Wow.
think they're getting better at it. And part of it is, I think part of this whole, kind of epidemic of ransomware and funds transfer fraud claims has really helped, right, companies to be more resilient, and take cybersecurity seriously. There's still a sentiment out there in small businesses that we're not a target, we wouldn't have these issues, but they really do.
I see, I see. Yeah, no, I absolutely agree. And it's interesting being able to see this, 30-year landscape, right? Seeing everything grow and companies learn and become resilient and catch up to the technology and also catch up to the to the attacks that are happening. Um, I'm curious, for you personally, right? Moving from your company to getting acquired and Wells Fargo and coming into Telivy. Um, what were your guiding principles in terms of your career choices and um, impact you decided to make on the industry? I'm curious, yeah, what drives you to do the things you do?
Yeah, that's a really good question. I think that there's several drivers that are kind of there. Part of it is just um, thinking about how some of the successes that I've had early on, right, in generating new customers has been around bringing more of a transparency, right, to insurance, being very honest with the insured, right, my customer as a broker, and I think that was kind of, I mean, it's sad to say, but I think that was kind of refreshing, right, and I think even still today, if you think about how a very technical product like cyber insurance or technology errors and omissions or directors and officers, these are policies that most buyers don't understand.
Yeah.
Now, enterprise level risk managers, yeah, they get it, right? They have the same background that I have. But when we're thinking about companies that have just gone public or companies that are pre-IPO or series ABC, um, or mom and pop deli shop, right? These buyers of insurance don't understand cyber. They really don't understand the perils. They don't understand what's covered, and there's dozens and dozens of exclusions. There's dozens of definitions where a limitation in a term and condition can be catastrophic in terms of that policy actually covering you. And so I think it's trying to bring that transparency to my customers that I've always tried to instill in kind of the businesses that I work for, the employees that I hire. And I think that it's made them all much more successful than they would have been, right? Finding ways to create and demonstrate that transparency should come in things like the proposal. Um, what are the strengths and weaknesses of a policy that you're purchasing? And most brokers just gravitate towards the strength, right? Here's the limit, here are the sublimits, here's some cool endorsements I negotiated for you. But what are some of these limitations within the definitions? What are the exclusions? How might they apply to my business model, right? Which is unique from another business model. I think those are all things that brokers that I've tried to instill in the teams that I've managed.
That's incredible. Yeah, that's like putting yourself in their shoes and sort of hopping over to their side and understand, what are my risks as the client and the practicality of how this could play out. Um,
Yeah, and I think from a buyer perspective, well, like I mean, the number of times a buyer, even sophisticated buyers, have sat across the table and understood that, hey, if my broker understands the limitations to the policy, I'm more confident that at renewal, that individual is going to do a better job for me at renewal. He's going to try to solve the problems that he couldn't solve in year one, in year two, right? And and you see that evolution, right, renewal to renewal, because every broker wants to go back with something better than they had the year before. Now, the market might dictate you can't get there, but price is one, lower deductible would be another, but eliminating deficiencies within a policy is something else, right? And that's where the true like kind of bespoke policies come into play at the higher level, right, of insurance, right? So your standard bot policy, there's not a whole lot you can do. You can buy endorsements and add them to it, but when you're really at the publicly traded enterprise level type insurance, these are all custom contracts.
Mm.
So the buyers really start to get it. And so I think that really that success or brokers that follow that type of guiding principles, right, can be more
Transparency,
successful.
honesty. Yeah,
Yeah.
explain the limitations. You answered my next question, which was, why do you do that? And yeah, it builds trust, and the buyers get it. They understand what's going on. And the more you sort of explain it, the more they feel comfortable and confident. That's really interesting. So I want to go back all the way back in time. So I saw that you got your Bachelor of Arts from UC Santa Barbara and your political science and government degree from there as yeah your so you studied political science and government at UC Santa Barbara. How did that shift into finance and insurance? I'm very curious.
Yeah, that was it was a little bit strange, and it's not there's no direct correlation to it. I was I think it was my senior year, maybe junior year. I started looking for internships, and so I was with I did a couple of stints with different local like political campaigns. So I think everyone knows Ariana Huffington, but nobody knows her husband, who's actually a congressman. But there were different candidates and campaigns that I would support. But when it really came time to thinking about internships that actually had a little bit more money to it and stuff like that, I got connected with kind of a retail securities slash investment banking firm. And so I got into that office and was doing all kinds of different things. It was a very small office. It was a two-person shop in Santa Barbara from a several hundred person shop that was based in Itasca, Illinois.
Mm.
The individual was in Santa Barbara for health reasons. So I was supporting that office as an intern. And really kind of enjoyed just looking at the types of deals that they were supporting. And back then it was pre-technology, so it was a lot of oil and gas, a lot of limited partnerships. Tax code had just changed, so people were finding ways to
Mm.
still salvage tax credits and tax favorable vehicles. And so I ended up getting my Series 7 with that firm, and then stayed on after graduation. So that was
Oh, you
political
did this
science.
all while you were in school still. Oh, wow.
Uh, the internship was in school, and then got the Series 7 as soon as I graduated, and then stayed on board with them as the early part of my career. And then, transitioning to insurance was incredibly random. So the partner in Santa Barbara unfortunately passed away, and so I had to find something else. So was moving back to the Bay Area, which is kind of where I'm from. And I just, went into the UC Berkeley Career Center, and I was like, okay, what should I apply for? And I was assuming I was going to stay in securities or banking. Um, and so there was there was one situation that happened, and this is a whole nother podcast, but for about 2.5 months, I joined kind of like a Glengarry Glen Ross meets the Boiler Room stock brokerage. So it was just high volume cold calls, pressure sales. It was nuts. And I actually did really well, but then realized that they were doing this pump and dump scam, like just like the Boiler Room. And literally the whole
Oh,
office resigned in one day. And this is actually right
resigned?
resigned. Yeah. So this is like right when the internet was going live. So this is probably 93, 92, 93. SEC.gov had just gone live. And so one of the brokers went online to SEC.gov and saw that our principal and our head of compliance were busted by the SEC,
Yeah.
a few years before in a pump and dump scam. And they were trying to encourage us to pump up a stock where the CFO and the CEO of the company we were pumping was the same CEO, CFO of the company that they had pumped 2, 3 years ago. And I've never seen anything like it. Everyone just grabbed their jackets and walked out.
That's awesome.
It was nuts. And so after that event, I was like, wow, now what do I do? and, and I actually landed at sorry, the dog's barking. So then I landed at this brokerage called Carpenter Moore. And the thing that really intrigued me was their description of directors and officers insurance. So the directors and officers have personal liability, right, if they do breach duty of care or loyalty, right, their fiduciary duties to their shareholders.
Mhm.
um, and so they only get sued typically, right, if their stock goes down. So for me, bringing in, right, the my banking background and retail securities background,
Mm.
I was able to really kind of get into that industry and then talk to a CFO, right, about their financial metrics, analyzing, right, their trends and gross margins versus their competitors and their peers, right, and how would you explain this, right, to a D&O underwriter so that they're confident in ensuring your operations versus your peers. And so I was able to use, kind of, what I learned through I did take a lot of econ and accounting courses through college, but then also the Series 7, and then analyzing securities, right, for these two firms, was able to use that as kind of my edge. Um, and D&O insurance is such a fascinating product, right? Because it's one of those things where you need to understand accounting, right? So it's accounting, balance sheet, financial statement, acumen. You really need to understand that because restatement of financials is what can drive your stock down. You need to understand the securities industry and securities law and what momentum, those types of things, how to value a company versus its competition. And then, right, then you have securities law, right? So what are you violating to get sued for? You need to understand the law, and then you need to understand insurance contracts, right, and the legalese of the insurance acumen. So very few people come into that specific discipline and do it
Mm.
well because there's so many different facets that you have to learn of business. Um, and then you apply that to different industries, right? So healthcare, right, regulated industry, securities and finance, right? If your clients are there, right, you've got regulation and different, right, code that you've got to be aware of. And then we've been talking about cyber and the tech industry, right? That's a whole nother set. So to do all industries really, really well is very difficult.
Interesting. And sort of my takeaway from that, from when you graduated and how you got connected to your first firm, and then the crazy story with the with the scam company. Um, it, life really, at least for you, t takes you in a lot of different directions. And I also sort of noticed that you, throughout your career, have been constantly going out, right? Going to the Berkeley Career Center, going out to get connected with these people, who were, in an industry different from what you've been studying since then, taking these new risks and exploring something new. Um, I guess, yeah, just a message for the folks just entering the industry. Um, yeah, I don't know. Do you have any thoughts on that? On just how much your career could change, maybe people's expectations when they're first entering or interning in the industry. Yeah, any advice on that?
I mean, I think from the insurance, standpoint, the thing that just kind of blew my mind was, traveling to New York to meet with different insurance carriers And, occasionally I'd meet some brokers from the East Coast as well. But they're all related,
Mhm.
100%. I'm kidding. But it seems that way. Like you meet an underwriter and they're a cousin of an underwriter at a different firm whose uncle got them into the industry.
Yeah.
Uh, so all I'm saying is that the when you get to a certain level, right, in insurance, you kind of know everybody and everybody knows
Mhm.
you, and it's still a very small industry at that level. Um, and so I would say, try not to burn bridges, right? Leave on good terms when you can. But I'd also say, have your own principles, right? I think honesty, integrity, those types of things are there. But what does your business allow you to do for your customers, right? Can you put enough time into your customers to the level that you'd like? And working for the big firms, oftentimes they don't let you do that, right? Because they've got to show improvements, right? They're publicly traded. They've got to show improvements to their gross margins. Um, and working, doing more with the same or doing more with less is kind of the theme that we're in. And technology can help you, but if you're not able to, kind of take pride in your work and understand that I can put enough time into my clients, there are firms that are out there that will allow you to do that. And I would just say, keep looking, but never leave on bad terms.
Mhm. Absolutely. And it sounded like, all of your experiences, your various experiences, uh, that was the thing that gave you the edge, ultimately, right? Because you had all this expertise, you were unique, and skilled, and um, yeah, and that's why, there was nobody else like you, and people needed you. So yeah, I thought that was very interesting. It sounds like we're starting to hop off, but I did want to talk about one last thing, which is Ascend and AAIN. Could you tell us a little bit about that? I found that very, very fascinating.
Yeah, so yeah, I love both organizations, and Ascend. I was kind of a regional board member for Ascend. I'm not even sure what yours was. Where I'm assuming they were like 2007 or eight, somewhere in that range. And it was just through kind of a friends within the industry that kind of got me connected to this group. And so what Ascend is, it's kind of like Pan-Asian career development. And so I joined that organization. And, part of the messaging back then, and this is wonderful to see the changes of today, but a lot of what they did was going into, a lot of the Fortune 500 companies here in the Bay Area, HP, McKesson, several other tech companies. And it was basically saying, hey, let's look at your workforce, right? Especially in the tech industry, right? Your workforce is two-thirds, if not 70%, right? Pan-Asian descent. Now let's look at your executive leadership, 0 to 5% in these companies. Let's look at your board of directors, 0%, back at in those days. And so it was like, if there are glass ceilings, if there are real ceilings, hard ceilings, or if there's glass ceilings and perceptions, right, what do you think happens to, your top engineers, right, your top leadership when they don't think they could advance to the next level? And so we did a number of different, kind of custom analysis, right, of a company's workforce and gave that presentation, right, to HR and oftentimes board members to talk about these issues. It actually evolved into an executive course at Stanford University.
Oh, wow.
Yeah, yeah. So I really love, kind of what that organization does. And then we would do a lot of other things like resume review for college graduates. We would do mock interviews for them so they could get ready, right, to go interview at companies. Um, I was in charge of doing kind of like continuing education, right, for professionals. So I would, kind of reach out into my network. I did a panel discussion on the solar industry. I did a panel on the state of the venture capital market and community, and would put people together when gosh, I guess this is must have dovetailed and overlap with Obama, because we were talking about social medicine, and
Mm,
had a whole panel come in from, I think we had um it was a Asian executive. I can't remember the title that he had, but and this is years ago, but from John Muir Hospital Group that
mm,
came out. We had a benefits broker, right, that came out from that industry. So we would build these panels to talk about, well, what happens in social medicine. What should people really be afraid? What will happen to the benefits market? Um, how does John Muir get funded, right, in these types of environments? And so those were all things that I was in charge of when I was at Ascend. And the organization, I would say, fantastic, and I would encourage any Pan Asian professionals to look at them. I would just say that it was more focused towards, at that time, and I don't know where it is today, but it was very skewed towards accounting and finance. So coming in from insurance, um, just seemed a little bit foreign, and not exactly kind of what would help me. And that's where um, AIN really comes in, right, to play, because now I am
mm,
focusing on Pan Asian career development in the insurance industry. And so I'm focused exactly where I kind of want to be. And it's one of those things that I've grown up in 30 years, right? To see brokers that we had relationships with, in different communities. There was a brokerage in Atlanta, right? And the owner was Caucasian, and his top employee was African American. And the comments that we would hear is that no black will ever own equity in my company. Um, my own business that I was a partner of, a senior partner told me, right, that no Jew would ever be a partner. Right, when I tried to nominate a Jewish person, right, to be a partner of our firm, he was rejected just on the base, right, of his religion. And so, seeing things like that were just shocking. I can't tell you how many, like, producer awards or senior leadership meetings that I had to attend, right, at Nasdaq or Wells Fargo or Arthur J. Gallagher. I worked for a division of Arthur J. Gallagher, Willis, Towers Watson. And you go to these events, and um, again, kind of that nepotism that I referenced, right, that you see in New York. But it really is kind of a old boys network still. It's changing. You'll see changes at the employee level where you see that diversity. Um, I'm kind of more interested in trying to affect change, right, in the boardroom, right,
mhm.
and the boardroom down. And we haven't really seen meaningful movement there. So that's where I hope AIN can really be successful. And that's why I'm excited to be part of that organization.
Yeah, something you said earlier really resonated with me, which is, basically, as a employee of the company, right? Can I see myself, becoming an executive, becoming a VP, or becoming, on the board of directors? And if they can't see that, that can have a big impact on their career development. And I'm curious at AIM, what are the tools you use to affect career development? You mentioned courses before. I imagine you do some advocacy towards, boards and the companies themselves as well. I'm curious what the approach is.
Yeah, no, so we just started about a year ago. And so right now we're still kind of in the coordinating, kind of what is our, kind of curriculum. So we're kind of looking at, four pillars, kind of networking, right? So just building better networks can help us. Um, Mentorship, right, is another one where, and I think that's where we're probably going to get more into that, career pathing and development. So we have that going. Education is one where I think your question kind of leads to, and part of that is I think getting into the universities and talking to people that are in the business school that really don't understand insurance. Um, just how insurance affects every single business in every single industry. I mean, it makes business work, right?
Yeah.
You can take
Yeah.
risks and chances, um, and really work with insurance to protect your balance sheet, maintain your profitability. And people really don't understand that unless you're in kind of a risk management school. So it's getting that message out. It's working with, we do see some great movement, right? And, I think with all the uh, politics, right, that are going on about ESG and DEI, I do like that the board of directors, head of HR, right? All of our top insurance companies, all of our top brokers um, have somebody that's in charge, right, of DEI initiatives. And so it allows us to bring some of these observations, right, to light, um, regardless of where you fit on the D, right?
Yeah. Yeah.
Right. So you're any shade of D, and those conversations are now happening. And I think that's great. Like I don't think that's necessarily hurtful, right? To be aware of what your fellow employee is going through, right? That only can be a positive thing, right? To be more aware. So to what degree, right? And that's something that's a little bit more political. But I do like what I'm seeing there, and with the support that we've seen in the insurance community of AAIN. We have dozens and dozens of financial sponsors. We're working with a lot of other race-based insurance association groups that have been
Mhm.
very generous to us and really want to see us succeed, and have really given us better exposure. So, I love what we're seeing from that standpoint. But I do think that education, again, I got off track, but yeah, we're starting in the colleges, right, building awareness. And then the other is the career education, right? So I don't know what I have to teach. Maybe things like um, and what the organization can teach. I mean, we have experts that are on, coverage council. We have experts in, kind of my space, which is cyber, right, insurance, and directors and officers, insurance. And I think we're looking for more professionals to join that can help educate, right, on things like general liability and employee benefits. Like I don't know if we have an employee benefits person at a senior level that can come in and help with career education on some of these other product lines. So we'll continue to evolve and grow, and I think that's the but the thing that I would really love to see us accomplish is kind of what Ascend has done, right? Pushing that board level senior
Mhm.
executive, right? C-suite boardroom type career path, right, for
Yeah.
us. So
It's incredible how everything comes full circle from studying political science to insurance and finance and cyber. This all sort of builds on top of itself. And I'm curious, actually, going back to AIN real quick. What I'm curious what the inspiration for that might have been. Um, and I'm just curious, were these problems that perhaps you experienced yourself or people that you knew who close to you experienced? Um, right, like the whether it's like, lack of career development resources or board representation or, these problems that you're solving today for the next generation.
yeah, no, it's really the answer to that is is so multifaceted, right? I mean, it goes into, like, for me personally, I feel like I've always been outspoken, too outspoken if you talk to anyone that's tried to manage me. I express ideas, and it, I think for um, those that I've worked for and that had to supervise me, those that can understand, like, hey, yeah, he's coming up with ideas that help the business, right? It's never been about self-promotion for me. It's always been about, how can I help my team? How can I help our customers? How can we help the business grow faster? And coming up with, those types of ideas and criticisms and feedback. And I think so for me, it's looking at a lot of I think Asian American peers that I've had in the industry that are amazing workers, but don't use their voice. And that's what I think is part of it is cultural, right? So it's easy for me to say Asian American leaders aren't represented, but do Asians train their children to be leaders? And I think those are issues, right, that we have to think of. And if a company, and what we have to convince a board of directors to understand is um, that that doesn't mean that that individual shouldn't be considered for a leadership position, right? Because the ideas they have, the cultural experiences that they bring to make the company more identifiable for their Pan Asian employees, right? So how do you groom that Pan Asian individual to be a leader, and how do you give them the opportunities of leadership to train them along the way that their voice does matter? I think that's what we have to figure out, right, within the insurance industry. Um, is it important? Is it valuable? Should it be done? Absolutely. But the companies might have to train, right, these individuals to be leaders, right? And I think that's kind of the bridge we got to build.
That's amazing, Kevin, and thank you for the work that you do both in the industry and with bringing the rest of us up, right? Training and helping the next generation. Yeah, I guess the last question is, as we end the podcast, who should reach out to you, and what's the best way to reach you, Kevin?
Yeah, so anyone can reach out to me on either pinging our website, telivy.com, Telivy, or just reach out to me at kevin@telivy.com.
Awesome. Thank you so much, Kevin. Pleasure speaking with you today. That's it for our podcast. Tune in next time.
Great. Thanks, Jeremy.
Thank
Really
you.
appreciate your time.